Hello, guys. Welcome to a quick wrap up for the Friday. Right now, we are at 1 o'clock Saturday, so I'm just gonna do a quick recap of what's happened today. I don't have the chart up for now because my brokerage is doing a reset for the Saturday, so I couldn't really log in, but nevertheless, I'm just gonna go over what happened fundamentally for the market today. And we'll be back Sunday for a better weekly outlook and weekly chart and Monday, session to come. So that will be Sunday. So today, just quick recap. Today we have the UK manufacturing production during the London session. Now, not only the manufacturing production data was a positive deviation, the trade balance, industrial output, and both month to month and year to year are all very positive. In fact, all the data shows a tremendous positive deviation. Now, this is a strong indicator, show you that the UK still has a very resilient fundamental strength regardless of post-Brexit. Now, New York session, we also saw a large positive deviation from the employment data from Canada. This has now complete our fundamental picture for Canadian dollar. Remember last week we have a very positive GDP data, and the previous labor market data was also very positive. So this plus last week's GDP, this week's employment data, and the in the OK inflation data has shown an internal strength of Canadian dollar. Now on top of that, today we have the Iaea report for the oil market. Basically, that the OPEC had made their output agreement to about 90%. That's a 10% growth from the last report, because last time the report was that OPEC member had made the 80% of their target, and this time it's 90%. So this is a very big surprise that not only OPEC member had fulfilled their agreement, they actually cut more of the oil supply. And this really surprised the market. As I mentioned previously, we already had a lot of smart money, meaning the hedge fund money, getting into the oil market and placing for a higher oil price. Because now people wait for a month to see if OPEC can even fulfill, because back then they couldn't, right? They always cheat. The members never had any integrities. But now that's not the case. So this micro element plus the internal economic strength of Canadian dollar, this has really complete a very solid fundamental picture for Canada. And that's why Canadian dollar has now become very, very positive for us, fundamentally speaking. Now, equity market today also closed green largely. So we have a very strong risk on sentiment today. You can see all the commodity currencies had gone up. And of course, the biggest news today was the meeting between Donald Trump and Japan Prime Minister Abe. They held a joint conference this afternoon, and they're going to spend the weekend together, which we will expect to see more news coming up on Monday. Donald Trump might also sign more executive order, especially in regards to the travel ban. So we have to see how the market open on Sunday. So, in terms of the press conference, there wasn't too much insight, but the general tone, as expected, is very friendly. And as I mentioned in my trade call, that it's really most unlikely for US to suddenly tear their relationship with Japan. You have to understand that US built a strong relationship with Japan with a lot of historical background. The US and Japan built the relationship since the post-World War. And it's just a very interesting relationship that US dropped 2 atomic bombs to this country, and yet helped them tremendously to rebuild. And 50 years later, they are the best alliance for each other. So this is a very solid relationship. It's just not going to ruin overnight. So yes, they have their differences. Yes, he is not happy about the currency situation in Japan. He is not happy about the automobile industry in Japan. But they are not going to become enemy because of this issue. This issue can always be solved during discussion. So that's why I'm always very confident about US and Japan's relationship. They are, there's a lot of political talk for sure, but if you look at the picture in a more fundamental scale, in a more historical view, it is very unlikely for US and Japan to not work together. Now, because of that, so the sentiment, of course, is very friendly. It's very good for the global market. Now, I wouldn't say the same thing between US and China. So if Trump is going to meet with Xi Jinping, then that's another story. I also wouldn't say the same thing between US and Russian. So you have to look at country to country from the historical point of view. So for Japan and US, I really have 100% confidence that the relationship should keep going on. So for each currency, as for today, I think for Euro, again, there's no major updates. But Euro, the outlook fundamentally still very bearish because of the ECB easing. The sentiment is also very bearish. You have a Dutch election, French election, German election coming up. You also have the Greek debt negotiation going on. We never know if they are able to meet a deal. They say they are going to, but we never know that. Now, one thing that is not on the headline today, but I did a little bit of research, is that Le Pen, the French candidate, really taking the lead right now. And this is something that's not perhaps reflect in the market yet, but this is very significant because this is exactly what happened last year in Brexit, when we had a poll that was very close matched, but because the general belief or disbelief was so strong that people simply don't want to believe that Britain might leave UK. That's why the poll was ignored. But if you look at the poll, if you just type in Google right now, see the French poll, Le Pen actually is taking lead, and a lot of people just brushing off, saying that yes, she's going to win the first round, but the second round in May she's going to lose for sure. Well, how do you know? So that's something really gets me worried about investing in Euro for long term, because she might win. If she might win, or if she wins the election, the France will really leave Eurozone. And if France leave Eurozone, this is pretty much the end of Euro. So this is something very catastrophic that might happen, has a very high chance, people just not aware of it. So I think because of that, Euro is definitely, for me, it's very bearish. I mean, of course, you have up and down days, things like that. But for me, for a better, fundamental outlook, I think it has a much, much bigger risk compared to any other currency, because this is a more structural risk than any other countries as for now. Now, for British pound, again, today the fundamental data was very positive to support pound. And for pound, really the risk is still this Brexit the negotiation and triggering of Article 50. But because we are not there yet, so unless we have a new, fresh negative sentiment, otherwise I'm holding a quite neutral position. Now, I am personally long British pound right now due to the fundamental data. So this is a more fundamental play for me, but I'm in a more bigger micro picture for pound. I'm more in a neutral perspective, just to see exactly what's going to happen for the Brexit, for the negotiation. For US dollar, right now, it's exactly same picture. You had a very strong, solid fundamental data. The sentiment was very negative from the past week to this week, but now it completely changed because the several events that has inject a lot of new, fresh, positive sentiment. You from the court ruling against Donald Trump to halt the travel ban, that was a positive sentiment. And you have the phone call with the Chinese Prime Minister Xi, that was another positive sentiment. Today you have a meeting between Japan Prime Minister Abe and Trump, and there was no mention or no attack on Japan in terms of currency manipulation or automobile industry, things like that. That's the third element of positive sentiment. And the fourth one is the new tax plan that is about to be announced in 2 weeks' time. That will be the fourth positive sentiment. Of course, over the weekend, you might have new executive order from Donald Trump. You might have a lot of new things coming out from Donald Trump that might sink the US dollar down. But nevertheless, for the existing information that we have right now, as soon as the sentiment turns upside, you can always getting back to buy US dollar because the fundamental picture is very solid. Now, Australian dollar is the biggest winner for the week. All the commodity currency had enjoyed a great ride today, from Australian dollar to New Zealand dollar to Canadian dollar. Now, the risk on sentiment globally, of course, helped the commodity pair. And the reason is because you have the Chinese data trade balance was very positive the day before. Today's IEA report on the oil market is very positive, and you also have a very positive Australian trade balance. So commodity pair is pretty much, once again, it's our more confirmed buy for Australian dollar, New Zealand dollar, Canadian dollar. Now, I know the New Zealand dollar had been largely sold off since the RBNZ jaboing the meeting, but the fundamental strength of New Zealand dollar is still very solid. So as I mentioned, I am still very leaning into buying New Zealand dollar at even a better level right now. So I am in a New Zealand dollar long right now myself. So for Canadian dollar, I already mentioned, very strong currency, both fundamentally and sentimentally. The only risk will be the renegotiation of NAFTA deal. But based on what happened to Japan and American today, the press conference, we really don't think Japan will again be very ultra unfriendly to Canada. It's just not going to happen because you gotta look at a historical point of view. These two countries are just too close together. There's no way they are going to, suddenly teeter up the relationship. So I think it's all political talks. When they have to really meet, Trudeau and Trump is going to meet next Monday, I think it will be a much positive outcome. And the fact is that whenever Donald Trump says something, that's actually a good sign, that things will become much better. Because if he says something that's very negative toward, it's even same thing for China. He was saying that he is not going to recognize one China policy, and then as soon as he made a phone call, suddenly the market turned very upside down, turn up for his risk on sentiment. So that's what we think is going to happen in Canada. It's a very positive currency to buy. Now, for Japanese yen, it's a little bit tricky because the meeting between Trump and Abe, definitely will provide more sentiment to Japanese yen. The fundamental side is that Japan cannot raise their currency value. That's a simple economic fact. They need the currency value to remain low. They need to stimulate their economy, and they need to survive on exporting. So they don't have any other choice to raise up their currency pair. But in order to compromise with the US, of course, Japan can invest more in the US land. They can maybe move some auto production into the US, maybe invest more manufacturing. Those are all negotiable. But the economic fact is that they just simply cannot abandon their low currency market. That's not going to happen. So because of that, we still hold a fundamental bearish view for Japanese yen. For Swiss franc, no major economic data or fundamental data. It is still just a reactive currency toward whatever happened to the micro sentiment. So right now it's neutral. And if you have any risk coming up, of course you can buy Swiss franc, vice versa. When the market is happy and everything's good, you don't want to buy Swiss franc. So guys, that's pretty much it. Again, I am not able to show you the chart, but this is just a quick update fundamentally for the market for today. I'll be back on Sunday for a weekly outlook. and have a great weekend. I will see you soon. Bye bye.